Marino Valencise is Chief Investment Officer at Baring Asset Management. He joins us now. Marino, thank you so much for being on the move with us. Now, you've increased your exposure to more risky markets. Is this just because of valuation? Because Europe, which I guess in 2012 was still very uncertain, seems to be on a better track, and so valuations seem cheap, especially for those companies that are very exposed to the emerging markets.
Well, I think that we changed exposure in mid-October because there was a clear signal from the ECB and from the Federal Reserve that they would do whatever they can to just sustain the markets. And I think we are heading towards a perfect storm with the BOJ potentially joining the QE party. Obviously, they're going to do it, Japan style, and probably not now. We have to wait for later in spring. Between March and April, the top 3 people at the BOJ will need to be replaced. And it's only after that that we're going to have a better sense of what is going to go on there. But the message is clear. There is a lot of liquidity. A lot of people have been overweight, what we define as defensive, expensive, such as consumer staples and utilities. So we think it's the time to go into higher beta markets, such as emerging markets, which actually have not performed very well during the last 3 years.
Are you more confident about 2013 than you were about 2012? We still have, of course, this huge issue of the fiscal cliff. And every day we either say, oh, they're making progress, or actually they may be faltering. Where do you stand?
Well, obviously, the fiscal cliff is going to be resolved. And I think it's going to be resolved probably sooner rather than later. There have been a few signs of, the will to compromise going forward. But I think the catalyst is really the message that there is going to be no tail event in Europe. Greece, European peripheral countries. The ECB has been very clear. It has provided a lot of funding to banks, which had hundreds of billions of euros to refinance in 2012. So the real catalyst has been that provision of liquidity, almost limitless, to banks and to financial institutions.
And I guess the promise of MTs were, the ECB hasn't really dispersed anything yet. But, I guess my concern about the ECB is that they say they were trying to push the governments to do more, to push more reforms, and they wanted, for example, in Italy, political stability. It seems that because yields are not going up, then governments may be taking a back step. So the ECB may turn around at some point and saying, like, guys, this is just not good enough.
This is what happens all the time. So as the pressures comes off, then obviously governments feel little need to do anything. Yeah. But I think things have changed. The situation is substantially worse than it was a couple of years ago. The population is really feeling the strain. I think the real issue here is that austerity is fine, but without growth we're not going anywhere. It's all about bank lending. It's about having a higher money multiplier. If we don't get that, if we don't push money into the system, if banks are retaining the cash and putting the cash with the ECB, we're not going very far. So we have to find new ways, creative ways, to get the money, the QE money, and let it arrive to the corporate world.
Maria, talk to me a little bit about what sectors you're actually overweight. You're still overweight IT and consumer discretionary.
Yeah. It's all about cyclicals versus defensive at the moment. So we believe that a lot of cash on the corporate side will eventually spill into some sort of CapEx cycle, so more spending on IT. We definitely don't want to be involved in things like consumer staples, which have reached valuations which are excessive. And actually, they have not corrected since the start of this rally. So I think that may well be the next shoe to drop in the next couple of months.
What's going to be the big play for 2013?
Well, I think the sector I like the most is agriculture. So within the commodity and material sector, agriculture offers a fantastic opportunity. You have a mix of demographics. World demographics are exploding, but also you have the weather in the northern hemisphere, which is very unstable, and this is because of all the story of the Arctic ice, which is melting, etc., etc. I'm not an expert, but the weather is changing. Another thing which is important to keep in mind is that every time there is social unrest, and there is social unrest in the world, and probably there's going to be more, the only price which goes up is the price of food. So this fits extremely well with that story. So from a macro point of view, agricultural stocks and agricultural commodities are an extremely interesting opportunity.
But, Marina, how do you actually do that play? Do you go straight in and buy soybeans, and do you buy wheat, futures of course, or do you buy companies that have exposure to that?
Yeah, you can do it in two ways. You can buy stocks which are part of the agricultural sector, so from producers to distributors, to anything which is involved with the agri sector, machinery manufacturers, for instance, fertilizing company, or you buy the ETF. And the ETF on grains is something which is very useful. You know, it represents corn, soybean, and wheat. You buy that, you have an exposure to that sector.
And Marina, overall, are equities still the place to be in 2013, or are they even more the place to be in 2013 than they were this year? Because corporate bonds had a great little run this year. It seems that maybe they're running out of steam.
Well, absolutely. Government bonds are a very dangerous place to be. High yield within fixed income is probably the only opportunity, together with emerging market local currency debt. But as more liquidity is created, as the danger sooner or later of seeing some inflation materializes, you need to be in equities. You cannot stay in government bonds.
Equities, so you like, you know, you've been through some of the sectors that you like. What else would you be buying? If you talk to me about your ideal portfolio, how much, for example, would you have exposure to commodities? Are we talking 15, 20%, or even more? And what else would you be buying?
At the moment, we will have something like 10% in commodities, probably a mix of gold, physical gold, and agricultural stocks or agricultural commodities. We haven't upgraded materials yet because we think that this recovery is probably more a liquidity-driven recovery in the market rather than a fundamental, cyclical recovery. But maybe later in 2013 there will come a time to add as well to the material sector.
Marina, we talked a little bit about the BOJ, and you were saying that actually you stand confident that all the central banks are ready to act. What do you make of what happened today? As you're saying, we're still expecting changes at the Bank of Japan, so should we not read too much into it?
Well, Abe has been indicated as the new leader only a few days ago, so we have to wait. But I think that after the leadership of the BOJ changes later in spring, between March and April, and I think there is another election in the summer. After that, we will have changes, and the change from targeted inflation of 1 to targeted inflation of 2, I think, will materialize.
Yeah, and that's exactly what investors want. Thank you so much, Marina Valencia there.